Welcome back. Are we going to see a nuclear price uptrend? Well, in today's video, I'm going to be showing you some things that may lead us to believe that we will see a nuclear uptrend in the crypto markets in 2025 and really lay out the strategy for understanding where the market is, where the market's going, where we should be in the markets, where we should be exiting the markets, and really understand what is hype, what is FUD, and what is going to actually happen. Because in these markets, it's very difficult to kind of understand. There's so much noise, there's so many opinions, there's so much to understand and take in. But what we're going to do is kind of understand the bullish side and also kind of look at the bearish or risk side. Because risk does not mean that everything's going to, go to zero, but the risk, you hear no risk, no reward. The higher the risk, the higher the reward. This is why a lot of people invest in very low market cap cryptos, right? I'm talking about like outside the top 500. They're investing in $10 million cryptos because they believe if even a little bit of the volume of the overall crypto market goes into this cryptocurrency, it can pump the price to $300 million, which would be a 30x in the price almost overnight. But is it sustainable? Well, I don't think that we're going to see a 30x in Bitcoin or Ethereum in just one pump. And if we did, I would imagine pretty much everybody would be selling, so we'd go straight back down. But there is a lot of opportunities still here in the market because everything is changing, guys. The market is changing, the metrics are changing, the world of finance is changing. So let's break it all down. Don't forget to give this video a free thumbs up, hit that subscribe button. That way you never miss a new video right here on the podcast. Now we're going to be starting right here with Jack Mallers, founder of Strike crypto wallet and also very big Bitcoin maximalist. And basically what he says is Bitcoin is really priced in with how much fiat currency is sloshing around the world. In order for all of this to work, we have to debase our currency. It's going to send Bitcoin nuclear. Let's listen to exactly what Jack says.
And this is why Bitcoin will decouple, because Bitcoin isn't priced on earnings. And if countries are looking for something to own, you're going to want scarce reserve assets. Long gold, long Bitcoin. Easy. So people don't understand what we're living through. And I'm looking on the internet and everyone's freaking out. And my message to my audience and to the Bitcoiners is just relax. You got to breathe. Calm down. Understand what you own. Understand what we're living through right now. Let the stock market puke and figure itself out. And by the way, is it over? No. What are we living through right now? We're trying. I'm literally on Wall Street having meetings with Wall Street people. This city is full of a bunch of over-levered, pompous hedge fund assholes. These guys, the stock market's down like 4%. These guys are begging and pleading and screaming for a bailout. Give me a break.
And by the way, in the beginning of 2020, when they shut down the global economy, I remember within like 2 weeks, I remember the big airlines, all the big ones, were basically saying they're going to go out of business if they don't get a bailout immediately. And I was wondering, I was like, okay, from 2010 to 2020, like if you go and look at the airline industry, how much profits they've made, I think it was something like just Delta alone made $10 billion in profit a year. Okay, maybe it was 10 billion for the industry, but I think it was 10 billion for one company, but maybe it was for the industry. Either way, they made a profit. Okay, every year, every freaking year. So in 10 years, it's $100 billion in profit. You would anticipate that they would put some of that as kind of like a rainy day fund or to have us as a savings account. Well, what we learned in 2020 was no companies do that. No companies have money on the side. It's actually viewed by Wall Street as a negative thing if you're just sitting on money, because Wall Street will look at it as, why are you not reinvesting in the business? Why are you not paying shareholders? Why are you not doing stock buybacks? That's how Wall Street looks at it. And so you see a company like Apple, where they have $100 billion in cash on the sidelines. What do? They buy back their stock with it, right? They don't even put it into anything productive. And so buying Bitcoin, you have to understand, like buying Bitcoin versus holding cash is a very different aspect. People don't hold cash because cash doesn't yield anything. You hold your money in JP Morgan, you're getting 0.01% interest, right? So there's no incentive to hold cash. You're actually losing money, especially during inflationary periods. And so what we found is no companies are doing this. And what he's saying is all the people on Wall Street, they're all over leveraged. And it's true, guys. Like they're all over leveraged. They're all almost all in. And when they take profits, they buy stuff with it, right? They buy gold, they buy crypto, they just move the money. So when you see like a real estate investor saying, oh, yeah, I'm selling my homes, it's like, okay, you're not making money on the homes. It's like, no, they want to take that money and roll it into something else, whether it's larger properties or gold, Bitcoin, stocks, like that's just how the money moves. And so I would agree with Jack here that pretty much our whole economy and the whole markets are over leveraged. I think it's by design because everybody is there. And if you don't believe it, just think about it, right? Wall Street people are over levered in the stock market. Everyday people are over levered in debt. It's the same thing because Wall Street is taking bets sometimes on margin, and margin is debt. So it's just a different kind of aspect of the debt, right? It's more, you would imagine investing debt is a little bit more productive than debt to go, buy a $100,000 vehicle that you clearly can't afford, I mean, $100,000 for a car. I still can't believe people are paying $130,000 for a car, 1/3 the price of a home. Anyway, there's more to Jack. Let's continue listening to what Jack says. And by the way, don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video.
Everyone wants a relief rally. We're now at the phase where everyone's like, oh, you hear that? Oh my God, Trump said that he's open to negotiations. Trump said he might walk back what he said. And no one's actually pricing in the fact that Trump means business. Whether you like it or not, Trump wants to help the poor American. Trump wants to create factory jobs. Trump wants to produce stuff here. Trump wants to fix the deficit problem. That's until I see otherwise, Trump is about business. Trump is keeping his promises. Whether you like it or not, this is not a political podcast. I'm just calling it how I see it. And you've got a bunch of over-levered people here in New York that are just losing their mind. Listen, it is what it is. And this is so bullish for Bitcoin. They're going to have to print so much money. Bitcoin is really priced with how much fiat currency is sloshing around in the world. And in order for all of this to play out and work, we have to debase our currency, we have to devalue our debt, and we have to create more fiat. It's going to send Bitcoin nuclear.
So there you have it, guys. That's from Jack. Now, obviously, he's a Bitcoin maximalist, right? And he's probably all in there on Bitcoin and the like. But at the end of the day, guys, what he's saying is accurate, right? They are not going to let all these Wall Street firms just go down. They're not going to let the debt market implode, right? But what does that mean? That means that they have to print more money. That means that the Federal Reserve has to get involved, whether it's directly printing or whether it's, these facilities that they do to interject in the markets. This is very bullish for Bitcoin. But keep in mind, when Bitcoin starts to move based on all of these factors, we have to understand really like how much are they going to be printing? Where is the money going to be going? How fast is it going to be flowing? Because this is really when people start to move, right? We're in the rotation phase right now in Q2 of 2025. We're in that rotation phase. We've been seeing it occurring, right? We went really parabolic at the end of 2024, brought it down in 2025, and now we're kind of sideways trading and everybody's nervous. We could go much, much lower, but the bottom line is that they are going to keep printing forever. It's just how the system operates. And it's a global system that's built this way. So it can't stop. It's not like one country can just like change, and then every other country follows. Like you got to rework everything in the whole global financial system, which could take decades. And so this is where people are hedging that bet and saying, well, Bitcoin can do this. Ethereum can be the future of finance. And you're seeing people transitioning, but these transitions take a lot longer than most people anticipate. And this is what CZ talks about in this clip, which I think is extremely important for most people to understand, because we've been hearing a lot of price predictions being thrown out there. And a lot of people are anticipating, oh, well, somebody bought Bitcoin at 25 cents and it went up to $1,000. I want to do the same thing. It's like, well, as time goes on, right, the returns that you're going to get are going to be less and less and less. But during these periods of the bull market and the repricing of the markets, you can see parabolic moves, 10, 20, 30x for a period of time until people, obviously start taking profits, and then that kind of runs out. It's like what we're seeing with the businesses. Anyway, let's listen to what CZ says here, the former CEO of Binance.
Advisor, you think we're gonna hit $1 million Bitcoin this year?
Oh, this year I'm not sure.
But you are confident that we will.
Over time, yes. I don't know if it's next month, this year, or next year, or however long, but eventually we will. I think we got enough momentum that this technology is just starting. I think people kind of have very high expectations for everything to happen instantaneously. So back in 1995, people wanted real-time video conferencing. Even today, video conferencing doesn't work that well all the time, right? We still have, hey, can you see me? Can you hear me? Kind of thing. So it takes multiple, like in 1995, people want e-commerce, but the payment infrastructure wasn't there. The logistics infrastructure, the delivery wasn't there. So it took many years for Amazon to develop that. So I think people underestimate the amount of time required to develop an industry.
And not just the industry, but the adoption and use on a wide global scale. Like we're getting there much faster, but it's still, if you look at El Salvador as an example, right? Nobody was really using Bitcoin in El Salvador. It was just not adopted at the pace that people thought, or as fast as people thought, because it's just been a few years since they kind of adopted that strategy. But the new acting SEC chairperson is saying that the U.S. crypto industry needs a Band-Aid now and a long-term solution later. Another indicator, guys, because a lot of what they're reversing now is the things that were put into place after the FTX collapse, right? So when FTX collapsed, they started putting these rules into place to, kind of suppress the industry, suppress some of these ecosystems, while at the same time not giving clarity, because they didn't want these ecosystems to operate. They didn't want these companies, these protocols to operate, because, at the end of the day, it just seems they didn't really fully understand this industry, or didn't care to understand it. And so what they're doing now is they're reversing a lot of the previous things that were stifling the innovation and pushing a lot of these companies overseas, or not to be able to get funding. And I think that a lot of this is the Band-Aids, right? But keep in mind, there was a lot of loaning and borrowing in the previous cycle that caused the downturn, right? That caused the FTX collapse. Celsius, Voyager, 3 Arrows Capital, BlockFi, all of these companies went down. A lot of people were affected by it. And now there's going to be even more money entering crypto. And by them removing some of these Band-Aids, right, or Band-Aiding the issue and not thinking about these long-term solutions right now, right, because obviously it takes a lot more time, that means that people are going to be taking more risk in the markets, being over-levered, more lending, more borrowing. And whenever you're over-levered, that's where you have risk. And so as we're entering kind of a nuclear uptrend in the market, whether it's now, in 2 months, 6 months, who knows, we have to keep in mind that as we move higher, there's going to be more levered bets and more people taking out, debt to buy into the market and hope it keeps going higher and higher and higher. And they're not going to see the risk of all of that. They're not going to see the risk of a downside. They're not going to see the risk of this Band-Aid just getting put on. And then when a long-term solution comes along, that may not be the solution that they like. And, they could pull out of the market for that, right? So a lot of this is going to be pricing in what people, or what the market believes is going to necessarily happen. Buy the rumor, sell the news. We're going to be getting into that buy the rumor. Well, we're in that time frame right now, right, where a lot of those anti-crypto regulations are being pulled back. The industry is getting a lot more help from the regulatory agencies and the administration than they were. And this is the rumor to buy. The news is when we start to hear implementation and the market starts to move much higher. And that causes more higher moves and more people to take out leverage and more people to bet harder on the market. When people are doing that and taking that risk and putting that risk money in the market, this is the time to exit the market. That's the time to take that money and give them your coins. Yes, the market can go up double from where it was, but if you're already up 10x, and you're like, no, I really want to hit that 20x, there's a big potential that you're not going to hit that 20x. You may not even hit 15x, right? And that's where that greed comes in. When the greed comes in, that is the top of the market. A lot of people are expecting like some event to be like, guys, this is the top of the market. In 2022, when FTX collapsed in November, I told my viewers, I said, guys, this is the bottom of the market. Forget all the noise. Binance is not going down. Coinbase is not going down. Grayscale is not going down. It was FTX. FTX was part of the whole lending and borrowing scheme with all those other companies that went down. This is the bottom of the market. People were writing on my channel, Cryptoviser, you're an idiot. We're going much lower. There's going to be other collapses, this and that. There wasn't. That was the bottom of the market, right? So when you're in that cycle, and even if somebody tells you we're at the top of the market, most people don't believe it. They're no, we're going higher, Cryptoviser. We're going higher. Like, okay, well, we sell the rips and buy the dips. That's really what the thesis should be, right? And again, this is not financial advice. I'm just telling you guys my opinion on what I do. President Trump signs a resolution erasing the IRS crypto rule targeting DeFi. This is one of those band-aids that they're fixing, right? So effectively, Donald Trump freed the DeFi ecosystem from U.S. IRS demands that such platforms, basically DeFi platforms, be treated as brokers and required to track and report user activity. This was a whole big thing during the bear market, that the Treasury implemented this and the IRS so that if you are a validator on the network, they wanted you to collect everybody who uses the network's information, which is literally impossible. And so effectively, that means you can't use DeFi, right? That narrowly focused IRS rule, approved in the final days of the former administration, had been formally struck down. And the agency is prevented from pursuing anything like it, according to lawmakers. They said the DeFi broker rule needlessly hindered American innovation, infringed on the privacy of everyday Americans, and was set to overwhelm the IRS with an inflow of new filings that it doesn't have the infrastructure to handle during tax season. And again, this was not like you just using DeFi. This was like the validators needing to collect KYC of every single person who uses the network, which again is impossible. But again, it goes back to what is going on, where the market's going, and it's not just the administration is pro-crypto. You have a pro-crypto Treasury Secretary, a pro-crypto Commerce Secretary. Guys, Howard Lutnick's company, Cantor Fitzgerald, is the only company that was willing to work with Tether, from my understanding, in the United States. And Cantor Fitzgerald's founder is now the Commerce Secretary for the U.S., Howard Lutnick. So not only that, but the president's family owns crypto. And so this alone, like the other like political party, they think that they want to do investigations and see why Trump is investing in all this stuff. It's like, guys, like, do you want to invest and protect your retirement and future, or do you not want to invest and just get to retirement and then you can't retire and you have to work the rest of your life until you die? Like, I don't understand this. Like, if you like investing, I'm not saying there should be manipulation in the market or insider trading, right? But I mean, they have a problem with this, with World Liberty Finance, but not with the Nancy Pelosi tracker, right? I mean, there's literally people who just follow Nancy Pelosi's trades. And in my view, World Liberty Finance is a very good opportunity to understand what not just the Trump family is investing in, but where the money is going to be flowing, right? Because if the Trump family is investing in this and believes in these protocols, I would imagine there's probably other people in their circle, other billionaires that also believe in it, and other users and developers. And clearly they did a good job like relaying what their protocol can do, like Chainlink, for the rest of DeFi. And so using this as an indicator of where the markets are going, right? I think is huge. Tron, Chain, and these they don't own all of these right now because they did some selling at the beginning of 2025, but effectively it tells you where they're investing. DeFi, layer one protocols that have been around for a long time. I mean, but really it's DeFi. And so there's also what I was just talking about with like the people on the other political side saying that World Liberty Finance is doing things to manipulate the markets on all of this. Well, World Liberty Finance has denied selling off Ethereum's stash. Now, keep in mind, from my understanding, they did sell back in the beginning of February, but this was more of a recent sell-off that people were worried about. The World Liberty Finance denied that the project sold off millions worth of Ethereum earlier in April at a massive loss. The claims that World Liberty Finance sold any of its holdings are wholly inaccurate. They have not sold any positions as currently reported. Speculation to the contrary is false. Reports circulated that the project sold $8 million worth of Ethereum at a significant loss in the thick of the market tumult incurred by the tariff issue. The report cited data from on-chain intel firm, which tagged a wallet that did appear to sell off 5,400 Ethereum as potentially associated with the enterprise. Although Arkham, the intelligence firm, told Decrypt that the wallet in question shares a Coinbase Prime deposit address with verified World Liberty addresses, a discovery that led them to believe that it was closely tied to the project. Representatives for World Liberty Finance didn't immediately respond when asked to address the situation, and I don't really think that they have to. It's a private company, but I mean, you could look on chain and see what they're doing with the coins. They're just saying they're moving it to different wallets. They're saying they're not selling it or whatever. I mean, personally, even if they do sell, I don't think that they're bearish on the technology, and I don't think that they should be. They were being accused of selling because of the tariff situation and trying to make money off of that. Guys, even if they sell Ethereum, you don't think that they're still bullish on Ethereum and basically all of the DeFi ecosystems? Of course they are. Of course they are. And not only are they, but Jeremy Allaire is as well. He forwarded I should say retweeted the Aave founder or developer saying the Euro basically Circle's Euro version of USDC is yielding more on Aave than on Wise and Revolut. DeFi will win. And Jeremy Allaire said, better, faster, cheaper, and more productive money. Go EuroC and Aave, which is amazing because we've been seeing a lot of Aave integrations and a lot of Aave usage and a lot of recognition, right? World Liberty Finance, they owned Aave. They sold some of it, it looks like, at the beginning of the year, although maybe they didn't sell, maybe they just moved it to a different wallet. But either way, they were involved in Aave investment. And, this is the new money, guys. You go put your money in a bank, you're getting 0.01%. Meanwhile, you stake the euro and you're getting 5.98% or 4%. I don't know what these numbers, to be honest, are, but it looks like either 3.26% or 6%. Either way, this is significantly higher. Even if it was 3%, this is significantly higher than any bank. And so why would you put your money in a bank? Why would large institutions put their money in a bank? You could say, well, it's safe, which is true. But I believe that we're also going to start seeing a lot more big money, right? Individuals and corporations putting their money into actual yield generating products. And it's probably going to be a lot of crypto, real world assets, borrowing and lending. We just have to keep our eyes on the risk factor on the lending and borrowing side. And talking about DeFi and interoperability, there's more coming from the Cosmos network. Cosmos has launched Eureka to connect Ethereum and the IBC network, which is the inter-blockchain protocol that enables native interoperability with Ethereum, allowing developers to build multi-chain apps. And again, guys, there are still blockchains in the top 20, top 30 that have zero or near zero interoperability. And Ethereum just keeps loading up the interoperability capabilities through these other chains. Cosmos, a network aiming to become the internet of blockchains, has launched Eureka, an interoperability layer designed to link its inter-blockchain communication protocol, IBC, with Ethereum. In their announcement, they said Eureka has expanded to the Cosmos IBC protocol, changing IBC from an ecosystem standard to a universal interoperability protocol, setting the hub on a course to become the home of multi-chain apps. Now, there are already projects that are supporting and integrating blockchain communication, Eureka. All those are on the screen right here if you want to pause. With the introduction of Eureka, many Cosmos-based applications and blockchains are now accessible to more users by extending the IBC to the Ethereum network. With the new protocol, developers can reportedly build multi-chain apps across multiple ecosystems without fragmenting the user base. Again, more usage, more integration, more investment. The future of crypto is like endless. It is literally endless. And so investing this year, we have to look at DeFi. We have to look at where the market is, and we have to look at where the market is going. But I go back to the risk factor because I do think that the risk is going to lead us to understand what is going to bring us to a bear market this cycle. I don't know that we know what it is just yet, but I'm right now I'm leaning to the fact that all of the buying that we're seeing from institutions at all-time record highs is the very risk. Okay, we know MicroStrategy has been buying and buying and buying and buying. Every yellow dot here is an acquisition, okay? And this orange line is the price of Bitcoin throughout time. What I see here is massive, 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 massive buying at the top of the market, right? We have one, we'll just do everything above 70,000, right? We have 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 dots. Basically since the Trump pump. And this is all-time record highs. And meanwhile, in the bear market, you basically have just as many, maybe a few more. But most of the purchases keep happening at the top, and this keeps bringing the dollar cost average for MicroStrategy higher and higher and higher. And so now we're at the point in the cycle where we are still literally at all-time record highs, maybe not at the all-time high, but we're at all-time record highs, right? We're higher than we were in the previous cycle. And they keep buying. And so if they keep buying and other companies keep announcing that they're going to be buying as well at all-time record highs, what happens in a downturn? How can they not sell if they're in a 50, 60, 70% loss in their purchase? Even if they have a long-term time horizon. You know, MicroStrategy has been in the game for a while, so they could sell at a loss and they could still bring their dollar cost average down. If companies start buying at these prices, this is their bottom. So we can't go lower than this. And so there's real risk involved here because the company having to sell in itself wouldn't be, in my view, the reversal from a bull market to a bear market. It would be the spillover effects. So if Semler Scientific or GameStop, let's say GameStop buys $2.5 billion in Bitcoin, which is what investors want them to do. If they take $2.5 billion, put it in Bitcoin, and then Bitcoin price, let's say they buy at 100,000, and then Bitcoin goes down to 60,000, that's a 40% loss. Will their shareholders force them to sell? If they do, and GameStop says we're selling our holdings at a loss, that could cause fear in the rest of the market. Is MicroStrategy going to sell? Is Semler Scientific going to sell? Are the Bitcoin ETFs going to sell? This is why I've been saying, watch what the ETFs are doing, because the ETF flows tell us what the big money wants. When we see a lot of outflows, the market continues to stay stable or go down. When we start to see inflows or less outflows from those ETFs on a daily basis, we start to see the price moving higher. But what happens if one of these companies say, we got to sell our Bitcoin? What happens if GameStop buys at 100,000 and we go down to 60,000 and they have to sell? That's going to cause ripple effects. And those ripple effects will cause more liquidations, more companies to sell, more people to be in loss. And that will cause more liquidations, more people to sell, more people to be in loss. And that's why when you see, typically when you see like markets dumping or going parabolic to the upside, this is based on factors that are very, very hard to stop, right? A liquidation to the downside. The only way to stop that is circuit breakers. And crypto doesn't really have circuit breakers, although they do kind of, which are the exchanges. But in stocks, if a stock drops 15% in a day, it gets halted. That way, all the algorithms and hedge funds can readjust their buy prices, their stop losses, their sells, and all of that to stop the liquidations. But we don't have that in crypto. And so if we have a liquidation from like a GameStop-like company, $2.5 billion, and then we have spillover effects, and then ETF starts selling, and everybody just starts selling at the same time, you just get a dump. And it's very hard to reverse course, right? It took us 2 years to get out of the bear market and just get to new all-time record highs in Bitcoin. It could take us 2 years to get out of a bull market and take the drawdown, draw it back down. I mean, from FTX collapsing in November until the bottom of the market was June. So we went basically 8-9 months from basically the crash to the macro bottom where pretty much every crypto kind of stopped losing massive amounts of valuation. And we're not just seeing this in Bitcoin. We're also now seeing this spill over into Solana, Janover. This is a company basically that was purchased at around $10 million or so by a former, I think, Coinbase employees or crypto engineers or whatever. And they raised $42 million to acquire Solana. And the stock price went up by like 7x or 10x almost overnight. So they have $42 million in Solana, and their market cap is double that. Meanwhile, what is the business itself, right? That's a risk. That's a risk for Solana, because if they keep buying Solana at, in the bull market, let's say the price goes down. I think the price of Solana is going to continue to go down. This could be a huge issue for a company like Janover. That is, their whole portfolio is debt into Solana. Again, so we're not going to know exactly when the top of the market is, but we can use some of the clues like we talked about, outflows of the ETFs, companies stating that they're going to sell, continuing to buy at the top of the market. These are all indicators that would cause me a lot of concern and want to exit that market. And so my strategy is buy the dips, sell the rips. Now, what a rip looks like, that's up to you. Some people think 10% increase is a rip. Some people believe it needs to be 10x increase. So that's really up to your investment thesis and portfolio. I don't have numbers in my head really this cycle. It's really kind of, I'm assessing what's happening on the macro scale, what's happening in the traditional markets, what's happening on a regulatory front, what's happening with the companies, what are they doing? And most people think as these companies are growing, like Coinbase is hiring 1,000 people, Gemini, they're going to go IPO, Ripple's going to get an IPO, Circle's going to get an IPO. Everyone's seeing this as like crypto's going to go parabolic forever. But no, this is where the market is starting to price these things in. And then once Circle goes public with the, as an IPO, it's going to have a little bit of a lull. And stablecoin going public, like how is this going to affect crypto? Well, I would imagine more money is going to be going into USDC, into DeFi, into investing, digital dollar, interest-bearing accounts on chain, all these type of things that are extremely positive over the long term. But I go back to what CZ said. To get to $1 million, it's going to take a lot longer than most people think. Are we going to hit a million this cycle, highly unlikely. I don't even know if we're going to hit $200,000 this cycle. Obviously, the lower market cap coins, there's a lot more opportunity to, see significant gains, but it's not guaranteed. And so I really want to know what you guys think about this cycle. Where are we? Where are we going? And, is this really going to work out? I mean, I'm kind of on the side of Jack Mallers. I do think that everyone is highly over leveraged. They're going to have to get bailed out at some point, whether it's a direct bailout or an indirect bailout, right? The Federal Reserve is going to print money. We've already seen that they're starting to allude to the fact that they're going to be loosening their policy. The president wants them to loosen their policy. All the secretaries of the different departments want that as well. I mean, I think it's going to be very hard to not get rich in these markets. And I don't mean like immediately, right? Like, don't think you're going to put $1,000 in and you're going to become a millionaire. There's a lot of people who believe this. It is possible. It's just highly, highly unlikely. Most people invest over the course of time, and over the course of time, the prices go up, and then they take out when they need it or at a later point in their life for retirement or whatever. But you guys have to remember, there's a lot of people who are not investing anything. So even if you're investing a little bit at a time, whether it's in stocks or crypto, and you're thinking about longer term. And so when you're thinking about longer term, you have to think which cryptos are going to be around in 5-10 years, which are going to have more technology, which are going to have more adoption, institutional usage, Wall Street and companies integrating them. Those are going to be the winners. And they will have parabolic moves to the upside, and we'll have major moves to the downside in between. But you're really looking at the longer term, right? Over the course of 20 years. Is it more likely than not that Bitcoin's going to go higher or lower? In my view, higher. As for the other coins, I don't know where it's going to be in 20 years. I know Bitcoin will be higher based on all the dynamics involved, unless there's a quantum computing hack on the network or some other major event, which is possible. Bitcoin will be much, much higher. That's my view. That's my personal investing thesis. So you also have to remember, like, if every millionaire in the world wanted one Bitcoin, there's not enough Bitcoin. If every millionaire in America wanted one Bitcoin, there's still not enough. There's not enough Bitcoin left after all of the people who are holding forever. There's not enough. And so that's just the US. We only have 330 million people. Think about the rest of the world, billions and billions of people. And most people in the world still don't know what Bitcoin is, still are not invested in anything. We talk about investing in retirement a lot on this channel. There's a lot of people my age and your age probably as well. They have nothing saved up for retirement. We're seeing more and more elderly people working, and some people, they like it, but they also have to kind of step aside. But some people can't afford to step aside, and they have to work much later in life. And the only person that is going to save you from that is you. You're the only one that can invest for you. The government's not going to do it. Social Security will never be enough. Your 401k most likely will not be enough. We haven't even seen a full generation go through a full workforce and then a full retirement 401k. I believe the first 401k generation retired in the last 5 to 10 years. So we don't really have full stats on that. Plus, that generation, that is the first 401k generation, they're still the baby boomer generation. So they had different opportunities from a financial aspect than the younger generations. And so it's going to be much harder, much, much harder. I had a friend who was putting in, I think it was 15% of their paycheck into their 401k, and their company matched, I think, 5%. So it was like 20%, 15 to 20% of their entire pay every year for multiple years, and they still did not have that much in their account. Like if you continue to annualize that until you retire, it's not going to be enough. Plus, with the rate of inflation and the devaluation of the dollar, for another 20 years, I mean, $50,000 today does a lot less than $50,000 20 years ago, and $50,000 today is going to be much less in 20 years. So you have to keep that in mind as well. In my view, the best hedge against this inflationary aspect is Bitcoin. That's the only thing that we have right now that can protect you from it. Even gold and silver is not It's not there. I mean, look at gold's price now versus 5 years ago before the pandemic. Basically the same compared to where Bitcoin is. So anyway, we covered a lot in today's video. Investing in 2025 is very, I'd say anxiety ridden, right? Because we don't know where the markets are going. There's people saying we're already in a recession, and then there's people saying we're not in a recession and we're not going to go lower in the markets. So we have to really analyze all the data points that we talked about. I think the biggest, most bullish one is that the president's family themselves are investing in DeFi. And so that alone should tell us, where is DeFi going? Much, much higher. I mean, anybody who doesn't think that is like, literally doesn't know what they're talking about when it comes to investing. This is like one of the best indicators of where the future of DeFi is and is going. Anyway, hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit that subscribe button. I'll see you when I see you, and invest responsibly in Crypto On.